Hello and welcome back to this FINGRAPHS podcast on Dukascoin TV. When we last came in early May, we expected cryptocurrencies to drop into June, rebound into July, August, and then drop again to new lows into the fall. We still believe this is the case, and here's why. We start with the weekly graph of Bitcoin. Bitcoin had made a double top in 2021 and has since entered a period of liquidation. We believe that this liquidation is not over yet. For now, the trend is still a bear trend, so heading lower. Our targets have not yet been fulfilled, and they're still pointing to below 10,000 over the next few quarters, and our risk index is not oversold yet. We did see an intermediate bounce as both envelopes were touching each other, but having the trend still heading lower with some downside potential without being oversold, we believe this downtrend is not over yet. Looking at the daily, we are seeing a weak bounce which started late June, early July. It was not quite oversold yet, and despite the bounce, the oscillator hasn't really bounced either. The downtrend for us is still underway and possibly leading us towards 14,000 over the next few months. In this respect, we believe that the whole bounce that we've seen since late June is a dead cat bounce, and that Bitcoin is getting ready to resume its downtrend. We draw the same conclusions on Ethereum. Ethereum is still heading lower. We believe it will probably still go below 1,000 again, and possibly below 900 into the 800s, as the downtrend for now is still underway and the targets haven't been achieved. We did see a bounce as both envelopes were touching each other, but as you can see, we crossed the whole envelope and could already be on a stress point towards our smaller envelope here. So here also, we do believe that we're close to a resumed downtrend situation, probably into the fall in first instance. We then move on to similar assets, and first of all to the Nasdaq 100. And we do believe that this is worthwhile because cryptos, in our view, are very high beta growth stocks. So as we look at the Nasdaq, we have a very similar analysis. We're in a downtrend. We haven't quite broken through yet into impulsive targets, but this downtrend is still underway, and we do expect it at least to retest down over the next quarter or so towards year end. So we are quite negative still on the downside, expecting at least a downside retest into the fall. Looking at the Nasdaq on the daily basis, we can see the bounce, which has been more dynamic in volatility adjusted terms than what we have seen on the cryptos. Yet here also, we're getting towards the point where we will soon hit resistance, the resistance of our corrective targets to the upside. We do believe that this rally will then halt and gradually roll over again before the Nasdaq drops again into the fall and potentially towards new lows. Finally, we look at the culprit of all these difficulties in high growth stocks and in cryptos. And we believe it's due to the fact that liquidity is being taken out of the market by the central banks. And as liquidity is being taken out, real rates are rising and multiples are being revalued. So we look at the inverse of real rates here. It is the TIPS, so the inflation adjusted treasuries. And what we can see is that they are very similar to what we have seen on the Nasdaq. So a drop here, probably an intermediate rebound, and at least a retest down into the fall. Usually when real rates rise, long duration trades are coming to difficulties. And so it's only normal that the Nasdaq and cryptos are underperforming. And when we look at this last chart, where we look at the Nasdaq versus the S&P 500, we have similar dynamics, but yet here also, as with the cryptos, we've made it below our corrective support and are now eyeing impulsive targets to the downside, probably into early next year. That's all for this week. We wish you a very good week of trading. Thank you very much.